presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Good afternoon, everyone. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. And a couple of things. We will be interviewing Tim that'll be at Tim Ward at 3:30, I believe. Yep, 3:30. And let's just run the numbers. And I do the Tiger Technicians Hour, 10 o'clock to 11 o'clock every market day. And my service here is the opening call, daily newsletter. Let's look at this. We've got the Dow down 51 at 44,870. After that PPI reading that was very, very much high, just way higher than anticipated, the market fell quite sharply after a spectacular session yesterday. But buying just keeps coming in. I mean, the Dow is now only down 48 points. It's in leg C in the Chapman methodology. You always anticipate that a buy signal going to a buy mode, which this is in, and we remain long. We had a short position for a little while, made some money, and now we're back to a long position. This is very interesting because within the context of the this downtrend line that you see here, I call this like an expanding cone. When the price breaks out above it, you start to look for left side highs. That would be 45,016 as the next high at the target. So far, this is really good action. If you look at the S&P, it made an all-time high yesterday. And it is trying to tackle that. It's down only 55 cents at 64.66, having slumped down to the 64.41 area. So it's only 24 points, not such a big deal. But all it needs to do is to go 1 penny above the 64.80.28 high of yesterday. And that starts another leg to the upside. And the weekly chart has gone to a leg. D and Chapman wave methodology, we're always counting those peaks, peak A, then B, C. If it gets upgraded to a buy signal, it goes to at least a D. It can go higher, but D is your objective. And here it is, already at the objective in the weekly chart. And the monthly chart is still very strong. Now let's go to the QQQ. NDX 100. 580 round number right now, up down 34 cents at an all-time high yesterday, and all it has to do is to go 1 penny above the 583.32 high of yesterday, and that either continues this leg G. If it's today, you could still do it, or if it's tomorrow, it goes. What will be really interesting in this particular technique, there is never an H. That means if we go, we don't make a new high today, but tomorrow or Monday we do. That says there's a new buy signal that's gone to a buy mode in a leg B, and it should go even higher next week. So this is really quite an important moment all around. And the IWM, the Russell 2000. Now, this is very important. It's come back very nicely. It's only down 3 at 228.22. It made an all-time high. It made a recovery high yesterday. It went to 230. I forgot to type that in. 231.46. Well, the low yesterday on that big gap up was 227.83. Well, it got me a little scared this morning because it actually went below that. Not only that, it went below the candle of Tuesday, the high of Tuesday. This is really unusual for a powerful move to give back so much. But in the meantime, the technicals are still pretty good. The stochastic finding has gotten to 82%. That's important. And then you've got this weekly chart with this whole cluster of resistance around about the 230 area, 230 to 231. If any time next week it just closes once into the 232 area, it says, you know what? In this particular phase, not after a big pullback, but in this phase, we might want to see 244.98, the all-time high of November, achieved and that's the small caps. The Russell 2000, there has been a rotation into the small caps. It needs to be sustained. That's the most important thing. At the same time, I just wanted to look at the semiconductors, because semiconductors are very important. Where they go, the general market tends to go. Made an all-time high yesterday's pull back today. It's a nice big green candle, even though it's down 54 at 300.74. So I think it's the jobless numbers. If the jobless numbers are really, if the market responds very negatively, that's going to be one thing. But if the market responds positively tomorrow to the jobless numbers, that'll be very important, because here again, if there's a higher high than the high of yesterday, which is at 302.98, you go to 302.99 tomorrow, and that starts another buy signal to buy mode for another couple of highs into next week. Very important. Okay, let's go to gold is down. So we've been gold for subscribers. We've been in gold for a long time. It's done very nicely. It's just stuck in this range. Look, the rectangle range goes to the top, pulls back, and I would say 33.02 is going to be key support. Takes that out, that's a real problem. But right now we've got this technique that I use. I had my webinar on Tuesday. If you're interested, you can become a subscriber and get that webinar. I went through a lot of really important, these are technicals, trying to put together the market action and reaction in all the different sectors, and then mentioning that there's very likely to be some kind of rotation where the IWM starts to garner strength, and you see stocks like a GE that's been fantastic. Take a breather. Look at that for GE. Look at Robinhood taking a bit of a breather. Still doing quite nicely, but pulling back. Microsoft hasn't broken out since the 555 high that was made in July. It's at 520. So to go back to gold, because this has to do with the rotation, the GDX, look, it's holding very nicely here. This is the gold miners vectors, and look at this technique, same technique I was showing you as the support in the gold contract. So the GDX gold miners has the weekly chart, this inside track repellent zone. The moment it starts to trade if it can, in the 61, 62 area, that's a breakout to the upside, and right now it's somewhat of a resistance, but it still has very good support. Silver, at this particular point, silver is pulling back 50 cents at 38.09. Weekly chart still pretty good. The daily chart has made this pattern that pulls back sharply, has about a 50% retracement, and now it can either arch over or break out. So under 37.20, it starts to take on water. It starts to pull back, and over 39.10, it's back in this range. It's just holding beautifully in the higher range. What am I missing? I'm missing bonds. Well, bonds are down almost a point. 114 and 22 30 seconds. This means that the TBT, you can see it right here. This is the ultra short limit 20-year Treasury bond ETF in the lower range, but really just kind of stable at a higher range. So I'll be back in a moment. This is Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. The Dow is now only down 21. The S&P is unchanged. I'll be right back after these important messages.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi, folks. So we're back. I had a question about my price time match. Well, if you can't use the exact low for the number of bars going down to equal the number of bars going right back up, you have to find a particular candle. So in this particular instance, this worked beautifully for the candle I chose for the rally to yesterday's high, going to that whole cluster formation that I was talking about in the 229, 230 area. But I have, and this is kind of aggressive, and it's, I can't believe I'm saying this, by September, the week of the 5th of September, there's a chance we could get to an all-time high of 244.98. That was the double top in the IWM from 244.46 back in November of 2021. Cascades to 161.47 October of 2023. Rallies back up to the 244.98 November 2025, 4 years later, plummets down to the 170s, and now has come back. I think that's a little aggressive, but I did do this, and we'll see if I might have to make a modification. So a couple of questions have come in. Let me just do that right now. Amazon right now. Amazon is trading very nicely. It's up 722 at 231.78. Of 3.2%. This is going to be important because the high that was made, not the all-time high of 242 from February of this year, but the July high of 236 is trying to tackle that. And from the technicals that I'm looking at, I would say that it's probably in a buy signal, about to go to a buy mode to retest those highs in the 235s. That's really important. What was there? Well, Apple is trading right now 233.42, up 12 cents. And this one is broken out in the daily chart. This is really important. It's in a leg B, and it's in leg D in the weekly chart. I do not like to see Ds underneath the previous high, because if it fails, it's not anywhere close to as strong, but certainly going from the 203 area to 233, this is 30 points up, so about 13% just in a week and a half is really impressive. A couple of other things. So the question came in about what do you think the volatility index will do? The question, I haven't got it in front of me, but the question was, how would the volatility index suggest that there's going to be a deeper correction? So the volatility index, the VIX index, as I'm reading it right now at 14.64, I spent some time on this the other day. I mentioned that historically, we've actually been in the 8s and 9s and 10s. And in July, we went down to 10.62. It's the 14s through the COVID and just for quite a while. The 14s have been kind of the range to monitor. So I'm just saying to you that if the volatility, forget about what the issue is, whatever the issue is, you can't have this 1 or 2 day spike that like this 21.90 high that was right here on the 1st of August. You really have to have a sustained move that goes quickly into the 18 or 19 area and then starts to make, in this case, the 200-period moving average is 18.53, and then starts to make the 20s its home for a little while. It can't just do it once. It's got to work towards that and then stay there. We haven't got that. So this is all very positive. So just to sum up as I'm looking at it, look, melt up, Parole says in the den. Yeah. So this is going to be very important. Look at this. This is the Dow right now. I mentioned that if it got to yesterday's high today, so yesterday's high was 44,949.12. We're 949, and today's high is 948.70 right now. Is that the high of the day? Yeah, we're at the high. So but within another minute or two, this could continue leg C. Unbelievable. What strength this is after all that bad news this morning. And what will happen is this cluster formation in the weekly chart, if it spikes above it, it really needs to clear it very well. It needs to get to the 45,000. 45,073 was the all-time high. That's why we remain along the Dow. It's been the laggard, and then it was a leader, and then it was a laggard. Just the other day it was lagging, and now it looks like it could be a little bit of a leader. So the S&P, where's that gone to? The S&P is still underneath the high. We've still got, what have we got? We've got 22. We've got another 38 minutes before the close. Now, let me just show you this. This is the E-mini. So this is what I had drawn in right here. So this is a brand new peak, A, B, C, D. We've just got to another D in the E-mini. It's gotten to a D in the cup and handle-ish formation in the 5-minute chart, and we've got to a leg C in the 10-minute chart. And look what's really important, using the technicals that I always talk about, the 9-period moving average is still very strong in the 10-minute chart. The 5-minute chart just went from the 200-period moving, this orange line, 200-period moving average, it just spiked higher, and now it's green with the 9-period moving average very strong, and that's very important. And as I say, let me just do this quickly. This is A. This is the same thing that we do in the daily charts or the weekly charts, monthly charts. Same technique. D is your objective. It can go higher than that, but D is your objective in a buy mode. And lo and behold, this 1-minute chart just completed that buy mode. Let's see if it holds. So just to briefly explain that this is, think of this 1-minute chart as the daily, think of the 5-minute chart as the weekly, and think of this 10-minute chart as the monthly. Those are the time frames I was discussing in my webinar the other day. It's very important to know your time frames because it allows you to go from one and then continue the pattern to continue, especially if the 9-period moving average is so strong as it is here, say, in the weekly chart of the S&P, and that helps the monthly chart. So the question came in. Yes, Tim will be here, I believe, in a few minutes' time, and I'm going to look at this. Yes. So questions came in about Bitcoin. Forgot all about Bitcoin. I always forget about Bitcoin. So as I say, we are long. Subscribers have been long for quite some time. Bitcoin still long. I'm watching this very closely because 123,615 was the high July the 14th, and then it made a cup formation. Left side, right side price time match went to tomorrow. It did it today. It went to 125,200. Big red candle. So you remember I was talking about this, that there's a chance we've got this rollover here with the General Electrics, the big leaders, Robinhood, Microsoft, a number of the position, well, we are long all of those, but a number of the key positions in the overall S&P in the market. But I put Bitcoin in that category because it too was leading very well, had a bit of a digestive phase, ran up to a higher high. But if you look, the technicals here are kind of weak. The 9-period moving average is still good. So let me do this quickly. So Bitcoin has to break above 100, not 25,300, but it really has to get to 127,000 in the next 3-4 sessions to say that that weekly chart is going to continue up and not pull back quite sharply. It's a little skinny candle so far in leg C. So that's what I'm looking at. And as I say, if we get a rotation, and if we actually do get the Russell 2000 showing some leadership, and let's put it together with KRE, which is the regional bank index, also coming alive after the XLF, the select financials, led the way all the way up. This is that rotation we've been talking about for quite some time. Perhaps now is the moment that we're going to see it. We need to see follow through by about Monday, Tuesday of next week. That's going to be really important. So with that said, we're just about to close out this segment. We're coming back with Tim Ord, see what he's got to say about the S&P and gold, etc. He's been just a wonderful attribute here to TFNN when he's been interviewed Tuesdays and Thursdays. We'll be back with Tim as soon as we return.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So we're looking at the Dow down 18 now and the S&P unchanged. Both of them are just about unchanged after a little scary moment with the PPI very high this morning. But the resilience of this market and the buying pressure is going to be, we'll see if that's maintained tomorrow through the jobless report. But right now we've got Tim Ord on the line. Tim, how are you?
Good. Thanks for having me on again.
Pleasure.
So,
Tim, can just before we do anything else, can you just tell folks how they can reach you and about your newsletter?
All right. We've been in the Oracle started back in 1992, so been doing it for a while. I've been in the equity market since 1977. Been in the top 10 of Timer's Digest numerous times. But my email is tim@ord-oracle.com. Got a website at ord-oracle.com. So been there, done that. So, okay. Want to move on to the charts?
Sure. Let's absolutely start immediately. What have you got for us?
All right. I assume this chart's up, but this is the daily Oh, well, good. Okay. This is the daily SPY. I want to point out, I got a couple of shaded areas here. One, the shaded area here, which basically defines this period in here. What I want to point out is there's a lot of ticks and trend readings in bullish levels in that area. Back in that would have been June. That's a June low. Trend readings below 1.2 are bullish. Tick readings, or actually trend readings above 1.2 are bullish because it shows panic in the market. And the tick readings on the close below minus 200 show panic. And panic only forms at bottoms. So anyhow, that picked out that bottom. And I want to point out what's going on right now. If you notice, basically between 6:30 to 6:40 on the SPY, we got quite a few different trend and tick closes right in this region here. So this actually is a support area between 640 and 6 in that vicinity, right in this vicinity here. And the market did pop above the previous high. This is July 31st right here. And if you notice, we had volume on that day of 103 million shares. You popped above it on this day right here on 65 million shares. Normally, when you break a previous high, the volume should be at least equal. And if it's 10% or lighter, which this one was, a lot of times they're false breakout. Not always, but it's kind of a warning sign that if you got to have what I call an SOS, a sign of strength through the previous highs. And we didn't have that on this would be Tuesday. Today's Thursday. Yeah, this would be Tuesday. We didn't have a sign of strength through the previous highs. So we kind of just fumbled up here. Yesterday's volume dropped a little bit compared to Tuesday's volume. And I don't know how volume's going to be today, but it'll probably be lighter than probably yesterday. And we may fall back into this trading range. This is where that panic formed. And I'm thinking this area is going to be the next area for a buy signal. Let's wait and see. Don't know, but that's what it's starting to look like. This is a weekly chart. We had actually, this is a bearish engulfing pattern on the weekly time frame right there. In other words, it engulfed the previous week, and we're up retesting that high right now. And most likely, I did this earlier today, and I don't think volume is going to get anywhere near what the volume was 2 weeks ago. So I'm thinking we're going to consolidate here a little bit. This one says we can get back down to 620. So we'll see how that works out. But I'm not long yet. I am bullish on the bigger time frames, but on a short-term time frame, we're not seeing actually ideal situations here. I kind of do this, the SPX tilt ratio. This is a daily. Last time I showed this on the show, I looked at it weekly.
Can I just interrupt for a second? When you say S&P tilt, the T, it means the TLT. You've abbreviated and you're so used to saying it, but for anybody new to listening to you, I just wanted to clarify, that's the TLT.
Yeah, it's the SPX tilt ratio. I'm sorry, but I pay attention to that. So that's the equity market against the bond market. So it's a ratio and shows you how those compare to each other. A lot of times this ratio leads the SPX, and that's why I want to point out here. So this is the ratio going in. Basically, this is a February high. The ratio is moving lower. In general, the S&P was making higher. You got the April decline. You got something similar going on right here. You're not making new highs on the SPX tilt ratio, but the S&P modestly did make you can see a little bit better on the side window here.
Right.
You got a little divergence going on. So you got a couple of things not ideal here. But this is the summer doldrums. You get all this weird stuff going on. And so just when you think it's safe to get long, the market kind of drifts back at you. Just when you think you found a bottom, the market still drifts lower. So this is not ideal time to trade heavily either direction. I think that time comes in September, October. But of all the quarters of the year, this is the weakest quarter. So I kind of tread lightly in this time frame, and so is it real bearish? No. If you go back to the first chart here, you don't really have a lot of downside, but you got a lot of panic in this region, 630 to 640 range, and I'm thinking at worst case we may get 620. I don't think that's going to be the case, because I think it's going to be hard to get through the 630 range, but that's how I'm seeing it. Nothing real significant to the downside, but I'm looking for a long trade to the upside. How long will that trade be the upside? I don't know, maybe a couple, 3 weeks to the upside, then probably more consolidation. I just think you're going to read in. I think we're heading into kind of a choppy market, where if this high doesn't go, at some point we'll probably go back down to 620, then try to rally again. But I think the big part of the rally starts later this year, September, October, and that's the one to lean on. This one is just probably a trade for a bounce, maybe 3 to 5%. I'm thinking nothing real huge to the upside, but I'm going to take the trade if it lines up, and we'll see if we get the pullback or not. It's going to happen. It's going to start this week and probably end next week. So it's just not showing any energy to the upside here. So I'm just being a little bit of patience. And so that's that. The next segment, we'll be talking about the gold market. And actually, I think both markets are kind of trading together, starting to look like. So we'll cover that in the next segment.
I just had a quick question. Someone wants to know, ask Tim to confirm the SPX TLT is a weekly data point.
Is it weekly?
Is it weekly?
No, this was a daily. Yeah, this was a daily.
That is a daily, yes. Okay, he thought it should be, but he just wanted to ask. Okay, we'll be back with Tim in a moment, folks. The Dow is down 1, S&P's up 3. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien, and my show usually is the Tiger Technicians Hour, 10 o'clock to 11 each market day, and my service is the opening call newsletter, and we're on with Tim Ord. We're looking at, I think we're going to go to the GDX. Is that correct?
Yeah, we're looking at the GDX. This is the bottom window is the GDX daily ratio. It goes back to 1920 or 2021. This is the daily GDX right here, and I just put an RSI on the GDX daily ratio, which is basically the RSI is for the ratio. So anyhow, I measured the volatility of the ratio, and I marked all the times in red lines, the times when the RSI got above 70. When I did this earlier today, it was 71.49. We had some similar reading on Tuesday at my last, I think I showed this chart last time on Tuesday also. So nothing really happened so far. We just stuck up here. But I did notice that, a lot of times they come in twos, kind of a double top here. I don't know if this time it's going to be around the case, but you get a short-term top that goes down a few days and goes right back up, makes a double top. And that may happen here. So we may see a pullback down to 55. I got support on GDX. This is the GDX right here. And we had a sign of strength through the previous highs of this trading range right here. And so I'm thinking around 54 is actually where that previous highs were. And we had a sign of strength through it. A lot of times you'll find support at that strength. So I am actually got short a little bit too quick. Didn't get the highs or anything. I'm short around 55, but I'm probably going to cover around 54. So not a great trade. But things just zinged up too fast here. But
Tim, can I just ask you, are you talking about the high that was made on the 8th at 58.81, and we're now, and then 3 days later, that was yesterday, on the 13th, it went to 58.77. That's a little double top you're talking about?
No, I'm thinking this 58 area is going to come back down to 55 and go back up to 58 again. That's what I was thinking.
Got it.
That may change. I don't know, but just the only reason why I'm bringing that up, because a lot of times that happened in the past, similar shit like that. So we'll see how that works out. But I'm going to cover the short on the pullback. So here's another range. I think it could be a double top. This is the monthly XAU going back to, there's 1988, so it'd be 87. And I marked all the times when the RSI got above 70. We're at 75.63 right now. So the market's extended. But if you also notice, XAU is testing the previous highs of 2010, 2011. So it's running into that high with the RSI over 70. Excuse me. So we got quite a bit of resistance here. We'll lead through it. Yeah, I think it will. But this is summer again. I keep talking about that. This is normally you get rallies into the summer periods, then you get these consolidations, and I think the gold market's up for consolidation too, along with the equity market. I think this consolidation could last a while, possibly September, October. So I'm no hurry to get long. I think gold stocks, this is not the final high, but I do think we'll have a timeout in this uptrend here, just because of XAU, RSI, because really, last time we got this high was the COVID high. That was yes. March 2020, and you consolidated actually a couple of years. So the RSI is in this period you get up there every year, well, every 2 years, 2004, 2006, or 2004, 2006, 2008. So it does suggest a consolidation, but it's pretty rare to get the RSI up there. We're up there now, so I'm kind of treading lightly. I think that the big ones are going to consolidate. The smaller ones, gold stocks and silver stocks, are just starting to turn up on the monthly chart. So I think of the places to be, is probably not to be in the majors right now. I'm kind of saying that for long, and a lot of these have really huge run-ups on the AEM and Newmont Mining. If you look at their monthly RSIs on those, they're all up around the 70, or have got up in the 70 range, and are now starting to correct. And so I think that correction on those big issues may last several weeks, if not longer. So here's a shorter term view. This is GDX on a daily. So you looked at the monthly, we looked at the weekly. This is what the dailies are doing. And this is it's kind of hard, but this is a GDX up-down volume with a 10-day average. And all I did was just, when it got around 50, that's all this indicator is. I didn't mark this one right here, but that probably picked out that high right there, and this one here picked out this high right here. But anyhow, I marked the ones going back until last August, so about a year back, and all of them marked consolidations. So this one, it happened, counting these 2 times, 11 times, and all those times, 11 out of 11, I'll put it that way, marked a consolidation. So all of them went down for looks like a couple of weeks or so. But do I expect that to be the case? Yeah. So I'm thinking we're going to pull back down to around 54. That's the reason why I brought this chart up. So it's the weeklies and monthlies, and the dailies are all kind of extended here. So just to be a little bit careful. But it's not a major top of any consequence. I can show some longer term indicators, but I'm kind of just looking at the short term. So I'm thinking through October, we'll probably do something like this one right here. A couple 3 weeks, maybe longer. I don't think of any major consequence, just to 54. So we got any questions or anything? Or
so just within that context, so some of the very small gold, especially the silver stocks, for instance, we still have the core mining, and every time I'm expecting a little bit of a pullback, it just keeps going higher, and it's just shot up. We're in from under 8, and here it is hit almost 12 today, and it looks extended, but somehow or other it looks like it's their turn to have their moment in the sun, because they're holding pretty well, the little ones. And you mentioned AEM, which is AEM is Anglo Eagle, and it's done extremely well. But also looks just on the daily chart, it looks like it's made this peak D, and it should just have a digestive phase. But it's amazing how gold and silver have found this year has been quite remarkable. Just a real nice breakout here, and you've pinpointed that really well. Congratulations.
Yeah, well, thanks. But yeah, they're extended, So on the, we looked at all the daily, the weekly, and the monthly time frames here, and at some point they're all kind of extended. So Just consolidation. I think the small ones are the ones to be in. The big ones, I'd take profits and throw it in the smaller ones. Is how I'm doing it. So I think this run is still in the early stages. I still think we'll run into 27. I got a cycle analysis. So, but we'll have consolidations along the way, and this is the beginning of one. So,
well, that's great. So, Tim, I must thank you. You always provide such tremendous information. That's really great. And folks, check out Tim's newsletter. And I really have to thank you for being here. And thanks for all that information.
All right. We'll talk to you next
See you on Tuesday. Yes, thank you.
All right.
So, folks, we're looking at the Dow. Dow's down about 6, S&P's up 3. What a day! I mean, when you think PPI normally with a kind of an abrupt news event like this, it went against everything, you would be down 400 points in the Dow, 60 points in the S&P. Hey, this is pretty darn good action. I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Thank you for joining the Dan Trump administration in advanced talks to acquire stake in Intel. So Intel was, out of all the semiconductors, probably the absolute worst. I mean, it just, look at this. It rallies back in 2023, rallies to the 50s, and then slumps down under 20, and it's been unable to get out of its own way when the semiconductors are going to all-time highs. And then they get, $6 billion they were given, and now the Trump administration is taking a stake in Intel. Unbelievable how some companies have the luck. I mean, anyway, so this is giving a boost to the semis. The semis right now just popped a little bit higher. They haven't taken out yesterday's high, but it's really important that they're holding well. The Dow's now up 20 and the S&P's up 6. So every time you think this is the moment that you can get some kind of a pullback in the market, yes, you get a pullback, but then you get a buying immediately. Look at the Dow, 44,938. Yesterday's high was 44,049.12. If there's a little bit of a rally into the close, this extends leg C. That's going to be really good action. So that's one of the reasons why we've remained long. We did have the short position going for this sharp move down in the Dow. Took a little bit of profit, and then we went back to our long position right here, and that's really, I mean, you can't fight this. The trend right now has been to move higher, and everything. Look at this. The bonds take a dive today. There, market says, so what? We'll see tomorrow. Well, I think it's the jobless numbers. We'll see what happens with the market after 8:30 in the morning Eastern time. Meantime, really nice day, coming back very strongly after being down quite a bit earlier morning. Basil Chapman sitting in for Tommy O'Brien for the Tom O'Brien Show. Have a wonderful rest of the day, and Tommy will be back with you tomorrow.
Building wealth